All right, guys, I think we'll probably wait for another minute or so. So get your coffees ready, get your waters ready, and we get the webinar started. Okay, I think that's enough waiting. Let's get the ball on the road. Let me just clean up this. Beautiful. So as mentioned, good morning, everyone. Thank you so much for taking the time, the busy schedule that I'm sure you guys have as business owners, for listening to what I have to say today. A massive thank you to Mac and Chloe and the rest of the team at the Great British Entrepreneur Awards for helping and kind of putting this webinar together. And hopefully you guys leave here fully equipped and knowing whether you guys might need or are ready to kind of get involved with some sort of funding, and if so, how and where to get it. But I guess today's first points would be let's discuss in regards to the agendas and what we'll be looking to kind of discuss moving forward. So I think the most important thing to do would be to make sure everyone's on the same page and kind of have a brief update on the market and where things are. We can then follow on and discuss potential whether your business might need funding, and if so, what are some of the options currently available for you. And once you guys have found out the various options, we can discuss common concerns about the commercial finance space and potential few myths that are learning around that. And then hopefully once we've eliminated a few concerns and addressed certain concerns, we can also find out how FO can support you guys and essentially the role that we play within the commercial finance space. But to kick off, let's discuss what the market is like at the moment. And I guess the elephant in the room should be in regards to the Bank of England increasing the base rates by an additional 0.5%. And now the base rates are currently sitting at 4%. Now, to be honest with you, it does affect a lot of things across the world, and it is going to affect the rates that our lenders within the alternative market are offering. A ton of the institutional backers, such as your Barclays, Goldman Sachs, are all heavily invested in a lot of our lenders. So the rates are due to go up. But what I've seen so far is that rates are starting to kind of, really settle down, and they're not moving up too drastically, which is a good thing. In regards to criteria, they are starting to, tighten up criteria ever so slightly, but not just for SMEs, but also for brokerages. During the start of the pandemic, lenders saw an influx of applications, and lenders unfortunately kind of blindly just sending any type of application through, which put quite a bit of strain on our poor lenders, which meant that they actually closed off and cut in half a lot of their brokering panels, and are now only working with a few select brokers that they can trust and know that will send them really good quality applications. In regards to SMEs, the criteria really has only tightened in respect to your monthly turnover might have to be slightly higher than usual. Lending options are slightly better for those who are homeowners as opposed to tenants. And in regards to lending caps, again, if you're not a homeowner, you're typically kind of capped at around a 50K lending amount. And if you're a homeowner, you kind of have, the sky's the limit for you. In regards to government-backed loans, there isn't much to actually discuss or talk about. Previously, we had the CBILS, the bounce-back loan, the RLS. The only kind of government-backed loan available now would be the RLS 3.0, which is the third of its kind, hence the name. And it actually shares quite a few, similar, it's very similar to its predecessor, essentially. The only main difference is that personal guarantees are now at full discretion of the lender, as opposed to previously they weren't needed. Now the lender kind of, can request it if needed. And from what the current state of the market is at the moment, most lenders will request a personal guarantee. And then lastly, fewer lenders in the market. Again, unfortunately, smaller lenders weren't able to compete with the really cheap rates that the government-backed loans were offering. So a lot of them, just didn't have the business to continue. So they actually kind of put out the market. And additionally, due to the Ukrainian and Russian war, a few lenders that were, had Russian backing had to also pull out due to kind of the sanctions. So that's kind of a brief market update. Guys, throughout this presentation, please feel free to throw questions at me. I will try my best to speak and also read the chat at the same time. So please bear with me. Just trying to check now to see if there are any questions in here. Okay, cool. Everyone's just saying good morning to you back. Okay, perfect. No questions at all, but please feel free to fire questions over at me once you guys are ready. So I guess to begin with, now that we've discussed the overall, I guess, market appetite, what we should also slightly touch base on is the fact that the criteria is tightening, base rates have gone up, but it doesn't actually mean that the appetite to lend is not high. We've seen an influx of approvals coming from our lenders as of recently, which is a great sign. Again, like I mentioned, institutional backers such as Goldman Sachs, Credit Suisse are all pumping, millions of pounds into a lot of the alternative, finance lenders, which is a great sign to show that, the appetite is high to lend. In regards to the government-backed loans, kind of a little additional touch-up. There aren't many lenders lending on the product. You'll find one or two alternative finance lenders that are doing so. Not many people have become fully accredited to do so. And if they are, they don't really want to be working with brokerages. And if they are working with brokerages, brokers don't actually want to work with them. And to be transparent, it's because those lenders don't actually pay any sort of broker fees. This will be kind of being fully transparent with you guys. Moving to the next point. What could you guys do? Sorry, guys. I'm having a bit of a technical difficulty here. Bear with me a second. Beautiful. So, even though the market is currently in a bit of a poor place, and I can see why a ton of SME owners could be slightly apprehensive as to why they want to potentially get funding, and on paper, if not still at the ideal time, potentially some sort of funding could be a good idea for you guys. And I'd like to kind of ask you guys a very straightforward question. If you guys were to kind of get funding right now, what could you do with it? Could you see a home for an additional 50K in your business? What could you guys do with an additional £100,000? Could you guys do with an additional £250,000? Could you find a home for it? I'll just let the questions come in and let you guys think a little bit about what you guys could potentially do with 50,000, what you guys could do potentially with £100,000, and what you guys could potentially do with £250,000. investment in AI. Eileen, you say you want to fund your next sprint. Is that a van? Biger says build up an app. Higher, Andreas. I can scale up my whole production. Perfect. Okay. So yeah, people can definitely kind of see a home for £250,000 and essentially see that funding can definitely help you guys. All right, brilliant. Could you guys potentially use the money for growth and expansion? Could an additional £50,000 help you guys hire a few extra sales team members that can help you guys boost revenue? How many eyes could see your business if you invested £100,000 into PPC or into an advertising campaign? What could be the potential on the ROI? Those of you that potentially could be looking to open up a new venue, could a £250,000 help you guys fit out, refurb, open up a new pub, hotel, restaurant? Are you guys missing out on expanding into new territories and finding new customers, again, to help you guys grow the business further and increase revenues and net profit potentially? Again, just checking some of the chats. Sorry, Tony, I didn't see your previous message, Tony. You need 120 million for a green energy project in Mongolia. I'll tell you what, Tony, you can definitely drop me an email and I can try and see if we can source that for you. Okay, perfect. So yeah, so guys, yeah, we can definitely find a home for hiring staff, £100,000 potential marketing, £250,000 to open up a new venue, again, £50,000 for a new piece of machinery, a new van. Maybe you need the funding to restructure some debt. It isn't always a priority to grow. Maybe you guys want to maintain. And kind of restructuring debt is a great way to allow additional cash into the business. A lot of my clients come to me all the time to refinance old debt. Monthly payments could be cheaper. You actually might be in a better financial position now compared to what you were before. So the interest rate for the facility now is slightly cheaper, again, making those monthly payments cheaper. You might look to refinance an existing old government-backed loan that has 6 months left on it. Getting a new 5-year or 6-year loan can definitely help, again, allow cash flow into the business. And most importantly, a lot of clients like to have or consolidate their debt into one place as opposed to having multiple lenders. And that's a kind of a really interesting point, especially when it comes to lenders during the underwriting application. If an underwriter sees multiple lenders within your bank statements, it sometimes can look a bit iffy to them. And if they only see one, they'd definitely be more inclined to lend to you guys. So yeah, there's so many good reasons as to why, you know, additional cash flow can be used for your business. Benjamin, how about funding on a pre-seed stage? Now, we typically only deal with debt, Benjamin. Pre-seed tends to be a lot of equity. Our niche tends to be, you know, raising debt only, unfortunately. Georgina says she's currently raising £50,000. It would allow her to pay for developer. Final invoice while I was waiting, last part of investment to come in. 100k gives her salaries to team and more marketing. 250k scale, full seed. Okay, amazing. To expand distracttv.com operations in South America. Amazing. Okay, lovely. Let me try and answer some of your questions, guys. So Andrew asked, what is the government-backed loan again, please? So a government-backed loan was eventually introduced by the government during the pandemic to help out as many SMEs as possible. It was essentially cheap money backed by the government. The loan was 80% backed by the government, and there was no personal guarantees needed on the facilities, Andrew. So essentially just kind of a nice, cheap facility for SMEs to kind of, you know, cope with the unfortunate time of the pandemic. Anonymous Anthony, what are the lenders you're looking for in an SME as part of the decision process for lending? I know it's an obvious question, but just keen to get your views. What is your engagement / fee model? What is the timeline and interest you charge? Okay, so Anonymous, I'll tell you what, let me answer those specific questions towards the latter stage of the webinar. I do answer them in a few other slides. Okay, amazing. Perfect. So we've discussed whether you guys could potentially look to use £50,000, whether you could find a home for 100,000, and whether you guys could potentially use 250. You might be needing it to grow and expand the team further. You might want to, you know, get more eyes on the business and kind of, you know, grow the brand further. You might want to restructure some debt, have all your loans all in one place as opposed to multiple lenders. What about for working capital and cash flow, day-to-day operations of running the business? How many of you guys are waiting on invoices to be currently paid by existing debtors? Let me let you guys answer that. How many of you guys are on 30, 60, 90-day payment terms and are currently still waiting to get your money? What is the impact of those outstanding debts having on your cash flow? Could an additional 50k, 100k, $250,000 bridge that small gap for the next couple of months until your debtors settle up? Will that allow you guys to run the business slightly more freely and with less stress? Yes, very frustrating, absolutely. The impact is that you end up robbing Peter to pay Paul in my situation. I'm sorry to hear that, Natasha. Couple more Q&As. Yeah. Any more questions? Any more chats? 250k would power up the marketing. We built everything for our private markets, both kinds of platform. Okay, the questions are flying in now. Questions are flying in. Let some more questions come in before I say anything else. The floral business or the floral industry just experienced Valentine's Day, one of the absolutely busiest times of the year for them. Could they have used, you know, an additional 50k to prepare for that period? They tend to need, you know, 2 or 3 months in advance. They might want to raise 50k, £100,000 in October, in November. What can 100k do for them? And once they get that £100,000 into the business, what potential margins can they make on that money? 60, 70%? Some of you are asked, do you provide loans against supplier invoices, manufacturing goods to be repaid on 4 to 5 months? We do provide loans against supplier invoices. We have stock financing facilities that can definitely assist to that. It will be good to kind of find out how much the invoice is worth. I use 250K to create a mock-up of an app and spend on marketing to create brand awareness and users, invest in consultants to create strong processes, and hire some team members. Brilliant. Absolutely brilliant. Okay, I'll let some more questions come before I move on to the next slide. But yeah, think about it carefully. Where could you guys need the funding? Growth and expansion, debt restructuring, working capital and cash flow. Are we letting, poor, current market states of, high interest rates, slightly tightening criteria, affect you guys, taking your business to the next level? That's fine. Small tickets, fine. We work alongside lenders that kind of specifically deal with smaller tickets, and we also work with lenders that kind of deal with higher ticket invoices too. That wouldn't be an issue whatsoever. How many of you guys are aware of HMRC moving up the ranks when it comes to calling in their debts? Previously, any debentures or charges by unsecured or secured lenders would have first rank in debenture, but HMRC now step in front of them. And I've had recently 2 of my clients have debts that they took holiday payments during COVID, be called upon, and they're left with no choice but to pay it right then and there, or they're forced to close their businesses. How many people have a 50,000, 100,000, £250,000 sitting in the bank account, ready to pay HMRC? Not a lot of us. So could 50K, £100,000, £250,000 come in handy for a short period of time? Absolutely, Richard. Towards the end of the webinar, I can kind of definitely give you guys or point you guys in the right direction of lenders who can kind of provide us outstanding small ticket invoices. Alternatively, our platform also, once you kind of go through it and kind of put in a few minor details, our algorithm tends to show you guys the relevant lenders for you guys. Roxanne says absolutely. Do you have any info on startup business loans and grants? I do, Sophie. What I'll do, again, I'll touch base on startup loans and government grants towards the end of the presentation. And yes, the Great British Entrepreneur Awards are recording it, so I think you guys will get a recording of this webinar at the end. Now, with all of these potential reasons for funding, it's always important to know what the options are. If you need or are looking for 50, 100, 250K, and you even need to kind of grow, expand, restructure some existing debt, you have an immediate need of cash flow, any kind of day-to-day operations, what are the options? In the market at the moment, there tend to be, I guess, 3 main financial products available. Business loans tends to be the key one, the biggest one that people tend to go for. And that's kind of typically split into 2 different types, which is your unsecured and secured loans. Unsecured loans are typically facilities ranging from 1 month all the way up to 6 years, made up of capital and interest repayments. Terms, like I mentioned, between 1 month to 6 years, but you can pay them off early. So for example, if you're looking to take out a £50,000 loan and you want to ensure that your monthly payments are as cheap as possible, you can take it on a, oh, the lights have gone off in here. You can take it on a 5-year term and have the option to pay back early with no additional payment fees. Give me a second, guys. Let me just get the lights to turn back on. Give me a moment. Sorry about that. So as I was saying, you can pay back early with no additional payment fees, and rates start from anywhere between 0.5% per month all the way to 5% per month. And again, that's going to be completely dependent on the credit worthiness of your business. And I think 0.5% tends to be between 6 and 7% per annum, and 5%, of course, sounds very expensive. But if you can find a home for it, you guys can take it. In regards to the secured loan side of things, it's pretty self-explanatory. A secured loan is typically a facility secured against some sort of personal collateral. So it can be some sort of residential home. It could be a buy-to-let. It can even be a commercial building. It could be a vehicle. We also have lenders that can secure on any high-value items such as yachts, watches, cars. So we have a number of options in there. The other form of business loans that we have available in the market are revolving credit facilities, which is one of my favorite products. And it essentially works exactly like a credit card. It allows you guys to draw down on funds as and when you need to, and you only will pay interest on what it is you use. So very simply, if you have a £10,000 facility and you only take out 2,000, you will only pay interest on the 2K, and the remaining 8 tends to kind of be there available at your discretion. It tends to be interest only, and rates typically start from around 2% per month, again on the money that you use. Right now, there aren't many lenders lending on this product, which is very unfortunate, because like I mentioned, it's a great product. But if you are able to kind of, liaise with a broker or have connections to someone who offers this product, I definitely recommend it, because it's highly flexible, and it kind of requires very, very minimum commitment as well. And I guess the last product within the kind of the business loan umbrella would be an MCA or a merchant cash advance. It is very, very popular with businesses such as in the restaurant sector, or people that predominantly kind of take payments through their card terminals. And lending is very simple. It's based upon your monthly card sales, and they essentially take up a daily percentage of your card transactions. So for example, you guys might negotiate a 15% take. So if for every £1 that you have or you sell, they will take 15p, and it will continuously take 15% of any transaction until the facility is paid back and their fee is paid back also. And if you have any questions regarding business loans, the revolving credit facility, the merchant cash advance, please feel free to fire away, and I'll slow down and answer any questions. Okay. Hi, Richard. Do I know any UK-based lenders who would be happy to fund projects in Uganda, Kenya, Tanzania, Zambia, Malawi, Rwanda that I can connect with? Not at the top of my head right now. Our UK-based lenders tend to just literally fund UK-based businesses. But if you're doing business in those countries, there might be something we can do there, but nothing at the top of my head right now. Are there any loans for early stage tech startups? Andreas, they are, but it depends on, I guess, how much skin you're willing to put in the game. The market has changed a lot. and it's very risky for lenders to kind of lend to, I guess, pre-revenue businesses. If you are an early stage business, then you're pre-revenue, most lenders would either like you to put some sort of security on the line just to make sure that, if anything was to go wrong, their investment is essentially safe. Okay, brilliant. Anonymous asked, why would someone choose you over other lenders? So, Anonymous, we're not a lender. We're a brokerage. Our platform gives access to SMEs such as yourselves, transparently find the best lenders and products out there in the market. And the reason why I guess you'd come to us for the post to maybe go to learn directly is that we're strategically well placed to give you all the knowledge. If sometimes lenders don't actually like you going directly to them, so with a broker, we can give you all the tools and equip you well to make sure that you have the best chance of successfully getting a loan with them. And Nira asks, what are all the interest-free options? So with interest-free, it's typically only the revolving credit facilities that would offer an interest-only facility, but there are no interest-free options. This is debt, and lenders need to make their money somehow. So unfortunately, no interest-free options there for yourself. I think it's Nira. Okay, cool. Perfect, no worries. The next type of financial options available in the market is asset financing, which is very simple. It's essentially funding to buy an asset. And there are two types of products within this umbrella. You have your hard asset financing and your soft asset financing. I'll start with soft. Again, very, very popular with people trying to kind of do refurbs or fit outs. So if you're a restaurateur, if you own a bar, a pub, if you have a hotel, it's typically for assets such as chairs, tables, any kitchen equipment, or items with a smaller resale value tend to be good for soft asset financing. And hard asset finance, again, pretty much what it says on the tin, tends to be for kind of really big, heavy goods, such as massive vans, cranes, any kind of niche lasers or niche engines that you might have. So if you're a massive construction or manufacturing firm, I actually did, for one of my clients, they're a surveying company. They asked for kind of a drone, which is worth over £100,000. That again would fall under on hard assets. So things that have a big tangible and have a higher resale value tend to kind of fall under the hard asset category. And lenders within this space are very commercial, and it's simply because if you take a loan out with them, a lot of the times the loans are secured against the assets themselves. So if anything was to go wrong, they can essentially just take back the asset and resell it and move on. Not to say, of course, that we want to be failing on any payments, but that is a good reason as to why a lot of lenders within the asset finance space are very, very commercial. And then lastly, invoice financing, one of the more confusing products within the space, but it's essentially where you guys would be selling any outstanding debt owed to you guys. And there are two types of invoice finance products. You have your invoice factoring and you have your invoice discounting. Typically, invoice factoring is where the lender takes control of your credit and they would be chasing the debt for you. Sometimes some clients don't like that because they don't want people speaking to their clients. And alternatively, discounting is for slightly bigger SMEs who have, the ability kind of to chase their own debt and might have an accounts team or a credit team in-house. Again, guys, these are the three main products within the market, but to give a few honourable shout outs, we do have stock financing and we do have trade financing as well. But these are typically the ones you would see going around in the market. Okay, any questions? John, I must be honest, I don't know what climate tech or reg tech is. I don't know if you would maybe give me a little bit more of clarification. I could definitely help. No worries, Stephen. Okay, perfect. No other questions. Now, regardless of what your businesses are, one of these options will probably be right for you. But we should definitely discuss common concerns around the commercial finance space and what actually stops business owners such as yourselves from going out there and getting the funding. Number one, scared of debt due to potentially a lack of transparency or education. And this is actually one of the main reasons why myself and my co-founders built FundOnion. We wanted to kind of give the power back and put it back in the hands of SMEs and make the whole journey of getting funding or getting access to funding a little bit less daunting and a little easier. High interest rates. Guys, I'll say this before, I'll say this again. I don't think interest rates are something that should, keep us away from taking our business to the next level. Something that I always tell my clients is that if you take out a loan, let's say it's 15% per annum, and you want to borrow £100,000, and that 100 grand can help your business generate an additional 150. The maths said itself. Don't let high interest rates stop you from getting to that next stage of your journey. If the margins make sense and the numbers make sense, the ball's in your court, guys. I'm not allowed to kind of, tell you what to do, but if the numbers make sense, high interest rates really shouldn't stop you. Personal guarantees, one of my favorites. A ton of people don't like signing personal guarantees. They're scared that, if they default on a loan or they miss a payment, lenders will be coming after their properties or coming after personal assets. And technically it is true. However, I must stress that a lot of our lenders are good people and they make money by lending money, not by taking people's personal assets. If you were to get in a situation where, you're finding it difficult to repay back a loan, all you need to do is have an open conversation with them about it, and they'd be more than happy to either find a way to get you guys back on a good path or put you on some sort of payment plan to make sure that the business can kind of keep up with those payments. And if you really don't want to sign a personal guarantee, we work with, or we have access to, a ton of personal guarantee insurance just to kind of make it a little bit less risky for you guys and make you guys feel more comfortable. And at the end of the presentation, I can kind of give you guys some more information on who exactly those personal guarantee insurers are and exactly what their criteria is. Impaired credit history. I guess this is a given. If you have poor credit, been involved in any sort of liquidations or IVAs, or have had quite a few defaults, it will be very difficult for you guys to get funding, especially in today's climate. So you might not want to bother to get funding. However, with that being said, we do have access again to lenders who are willing to kind of take a punt. The interest rate will be slightly higher because, of course, you do come across as a more of a risky profile, but it doesn't mean that you aren't able to get funded. Again, going back to, if the numbers make sense, there's no reason why you shouldn't do it. But don't let impaired credit history stop you guys from at least attempting to get funding or having a conversation with someone like myself or any other brokers in the country. Unrealistic expectations, which is also another one of my favorites. A lot of people tend to believe that they are capable of getting, the cheapest money on the planet without any, real due diligence. I had a client recently call me up saying they want to get a 1% per annum loan whilst the base rate's at a 4%. It's very unrealistic. You need to kind of bring those expectations slightly down and allow us to kind of, give you, I guess, more information and kind of give you a realistic approach on what's really available for you out there. Homeowners and tenants. I touched on it briefly before. If you are a homeowner, the market is actually a great place for you. There are a ton of options, and like I mentioned, the sky is the limit. If you're a tenant, the options do tend to be slightly less, and lending amounts do get capped around 50k, and interest rates and terms, again, slightly less favourable compared to if you're a homeowner. And just to kind of give you an example, if you're a tenant, you're typically looking at between 12 to 24 month money, with rates at between 2 to 4% per month. And if you're a homeowner, you can definitely get access to up to 6 year money. Again, you can be a homeowner and have really poor credit and only have access to 12-month money. But at this moment in time, you can't be a tenant and get above 24-month term money, unfortunately. But again, don't let that stop you from going out there, having conversations, finding funding. If you can't get access to a 5 or 6 year loan, it doesn't mean 24 months or even a 12-month loan couldn't help your business get to the next step. And of course, lastly, broker fees. Don't be scared of broker fees. We are one of few brokers in the country that don't actually charge a broker fee. We only get paid on succession by the lender. And if brokers are charging you fees, I always have to say, listen, nothing in life is free. And of course, they are providing you a service. But I don't think everyone charges you a fee, because they don't. And always ask, if you're ever concerned and you want someone to be more transparent, ask them, what are you making off this? What are there any fees? Is the lender charging a fee? Do not ask. Make sure you ask. Make sure you're aware of exactly what's going on, the document fees, broker fees, and I'm sure the broker will kind of tell you upfront exactly what the costings are going to be. Does anyone have any questions around the concerns around funding? Anything about the rates, personal guarantees, homeowners, tenants, broker fees? Hi, Joe. We can definitely help businesses with turnover less than 50k. You're probably looking to get 5 to 10k money. You probably won't get any more than that. If you're looking for 50, 100, £250,000, maybe £500,000, it'll be very difficult to kind of raise that with a turnover of less than 50k. Neil, to get a 150k loan, what would the lender be looking at as an expected level of sales and retained profit? Well, great question, Simon. To give you an example, one of our best lenders tends to have a lending ratio of 40% of your turnover. So, typically, if you want to borrow £150,000, I'd say to be safe, you've got to be doing at least 300k, 350k, essentially, with at least a 10% bottom line to kind of get a 150k loan. And you probably would have to be a homeowner too, Simon. Is there a way to raise money on an existing business to start a new one? Absolutely. Absolutely. Of course there is, Ruth. Going back to one of my first slides on growth and expansion, if you have a business that's doing well and you're looking to potentially expand and buy another business, your existing business can take on that debt, and you can use that debt to kind of purchase another business or start a new one. As long as, of course, you can keep up with the monthly payments of the loan, there shouldn't be an issue whatsoever. Greta McDonald, what kind of sales do you need for 50k, 100k, and 250k? So like I mentioned, our best lender tends to lend on a 40% of turnover ratio. So if you want to borrow 50k, again, I'd be safe and you have to do at least 150k turnover. If you're looking for £100,000, you'd have to be doing at least 2 to 250k in turnover. And if you want to borrow £250,000, Greta, you'd have to be turning over in excess of £500,000. And you'd have to be a homeowner for 100 and 250k. At 50k, you could be a tenant. Expand to take a franchise in my existing business. Yeah, Bruce, you can do that, absolutely. Again, it all comes down to serviceability of the existing business. Simon, it would depend if you have a current exposure with that existing lender. And if you do you have existing room within that exposure? So no, not necessarily. They wouldn't need to consolidate other debt. If they can see that the business can service the existing debt and the new debt, and you guys don't want to touch it, it's absolutely fine. Perfect. Any more questions, guys? Zara, what are the typical repayment terms? Great question. Like I mentioned, terms are typically between 1 month to 6 years. I always recommend our clients taking the longest term possible to make sure that the monthly payments are as cheap as possible, making it easier on cash flow. Again, if the business comes into a bit of cash, or you guys have really few good months of trading, you guys can, there are facilities where you're allowed to pay off early with no additional repayment penalties. But typically, if you're a non-homeowner, terms are anything up to 24 months. Typically, they are 12, if I'm being transparent. And if you are a homeowner, you can get terms up to 6 years. Typically, people tend to go for between 3 and 5 years. I hope that answers, Zara. Okay, amazing. Those are the concerns. Guys, if you do have more questions, please fire them away. But I guess I'm just conscious of time. We have 10 minutes left. We've discussed whether you guys might need funding. We've touched briefly on the market update. We discussed, why you guys might need the funding, whether it's growth, expansion, debt restructuring, cash flow, working capital. We discussed about the various different options, business loans, secured and unsecured, the two very different types of asset financing, hard and soft. Touched very briefly on invoice financing. We touched on some of the concerns in the market and why they shouldn't stop you guys from going out there and getting to that next step of business. But once you've decided that you guys potentially might want funding or you're feeling for it, what's the next step? How can FO support you? What's our role within the market? So as I mentioned before, FundOnion is one of the UK's leading business finance platforms. We built it to give you guys access to funding to lenders and all their products in less than 90 seconds. And we're the only brokerage in the country that doesn't, make you fill out a form, a very long form that is, and promise to kind of give you a call back within 24 hours. We actually give you guys the information right away, all the power at your fingertips. No need to call us, and there's no need for us to call you, unless, of course, you guys request some sort of human touch approach. But FundOnion is all about transparency, and we're perfectly placed to kind of assist with any funding needs you guys might have. We partner up with great partners such as GBA. We also work alongside people like Sharp, the British Pest Control Association, all assisting their clients with any funding needs as well. We have both a human touch and a tech approach. We fully understand that the world's moving in a very kind of automated way, but we also understand that you always want to speak to a human on the other side of things, and we try and make sure that our brokers are fully taught and skilled to kind of, speak to someone on the phone and give you all the required tools when it comes to accessing funding. We care about our clients massively. I fully understand what it's like to run a business because I run my own, and I always put myself in your shoes and know exactly what it's like. So you're not speaking to robots. You're not speaking to kind of, people that don't know about the industry. We're speaking to kind of very like-minded business owners. And we over here at FO, we care about you guys very, very much. And most importantly, no broker fees. There is no commitment to inquire or apply through FundOnion. You might make an application or sign up on our platform. You can just do that. You don't have to kind of, fully commit to any sort of application whatsoever. If you just want to find out some information, maybe you want to make a plan for the next 5, 6 weeks, months, whatever it is, you can call us. You can drop us an email. And again, myself or anyone on the team, we're more than happy to pick it up and have a conversation and help you guys strategize about the next step for you and your business. And with that being said, guys, I think I've touched on everything. That's the end of the webinar. I hope you guys liked it. It was a good educational piece. If you have any questions, please feel free to kind of fire them over to me. I think I will give it until potentially 12, maybe 12:05 to answer any questions. And yeah, hopefully you guys enjoyed it. Let's see what's here. Okay, beautiful. Ruth, do you like a call? No problem at all. What I might do, I might get Mac to see if he has your details, and I can potentially give you a call. I'll write down Ruth Hyde. Hopefully some of you guys are going to be attending the next Entrepreneur Awards event. We were at the last one. It was an absolute stunning show. It was really good. So if you guys are there next time, we're good to kind of pop in and say hi to you guys as well. Okay, Katie James, would like a call. Amazing. No, thank you guys. Thank you so much for taking the time out of your busy schedules. I know time is so valuable these days. So I hope you haven't taken up too much of your time. And everyone has a cracking rest of the year. Maybe if you guys don't want to speak to me, please feel free to check out fundonion.com. Go on our guides, our blogs, go on the journey, see it for yourself, see the options that the algorithm matches up to you guys. And again, have a play around with it, see the rates, see the lenders, see what you think. And if you're interested, apply direct or give us a call. Okay, Joel. Perfect. Okay, just to answer some of the questions in here. What are the lenders generally looking for in the SME department? For lending? I know it's an obvious question. I've already answered that one. What is your engagement fee model? As I mentioned, we don't charge a fee. What is the timeline and interest you guys charge? Again, we aren't the lender, anonymous, but like I mentioned, rates on business loans range from 0.5% per month all the way to 5% per month. Oh, great question, Uwain. No, using our platform does not perform any sort of credit check whatsoever. You can use it as many times as you want, and it will be no impact on your credit search, your credit profile. Sorry, it's completely free of any searches whatsoever, guys. Okay, a couple of minutes left. Still have 26 people in the webinar. Any more questions, guys? Please feel free to fire them at me. Okay, doesn't look like we're going to receive. Oh, okay, perfect, Michelle. Yeah, doesn't look like we're going to receive any more questions, guys. Like I mentioned, thank you so much for joining me. If you have any questions, the webinar is recorded. An email will be going out to you guys. And yeah, feel free to contact myself directly on neil@fundonion.com. Go on our website, give us a call on our landline, and a broker will be on hand to answer any questions or help out with any existing or new applications for funding, guys. But yeah, I guess I'll leave it at that. Thank you very much and have a lovely rest of the day.